I think Brian's in the house.
I'm here. Good
All
morning,
right,
good
Brian,
morning.
how are you, man? I hope you had a good weekend.
Yeah.
You know, we had that another bearish event with Peyton Manning, who I was pulling for to win the Super Bowl. So we have the January barometer, which is negative stocks. We have the Super Bowl indicator that's negative stocks. We have North Korea sending up a ballistic missile. A few weeks before they said they have the hydrogen bomb. Makes me want to buy the S&Ps with both hands. Yeah. So why don't we just pick it up? You have the floor, buddy. I've
Okay.
read the few pieces you put out. The major change I see from you in your recent writings is you don't sound as bearish gold anymore.
Correct. Okay. What's happening is the current central bank models are in a major revolutionary restructure. What's the restructure? You know, I didn't know this, but the restructure began in early 2014. This is when the central bank studied Silvio Gozell. He was the person that wrote about negative interest rates. Are you ready for this? In a famous paper in 1891 called The Reformation of Coinage as a Bridge to the Social State. I read the paper. I also read the 1906 book, The Natural Economic Order. This is what the central banks are doing now is they're all moving to negative interest rates.
Remember when we had a beer? I think it was November 1906, you and me?
Yeah.
Oh, we got together for happy hour right before the Knickerbocker crash.
You know, I looked up the Knickerbocker crash. I know I'm skipping around, but that was the United Copper Company. Something happened. They went bust, and then the bank was the Knickerbocker Bank in New York. Who knows? I mean, I didn't look at it real deep, but you know, those were the days of the greatest stock manipulations that there ever was. We didn't have broker call loan rates. I don't know if we had PE ratios then, you know. So what's happening?
Okay, so we're in this restructuring. Is the restructuring, besides the rate structure and going to negative rates, have anything to do with revaluing the dollar?
Yes, it does. As a matter of fact, all your currencies are being revalued right now. I didn't know this until just recently, that all the central banks since early 2014 have been studying this negative interest rate deal. And you know, it's Europe. They're always the first. They adopted negative interest rates. Now they're all doing it. What does it mean?
You think the U.S. moves towards it eventually, Brian?
No, I don't. Not yet, anyway.
Okay.
No. I think that they stay where they are. The problem is that if we still see there's 6 central banks right now that are negative. You want to watch Bulgaria? They're at 0. You want to watch Israel? They're on the verge. And you want to watch the Czechs, the Corona. They're on the way. Will it affect the dollar? Not yet. Not yet, anyway. And why not yet? It depends. If the only game in town is going to be to earn yield in United States Treasuries, money is gonna. You heard Mark Chandler the other day. $5.2 trillion a day float around that money needs to earn interest. It needs to earn yield somewhere. If the only game in town is the United States, then that's where it's coming. It's coming into United States yields, stock markets, and everything else that the United States offers. And then
okay, let me just push back on that, because sometimes, look, there are higher yielding currencies because they're in a currency crisis, like the ruble. You could have gotten huge yields on the ruble but it doesn't it get to the point where you might get a higher yield, but if the underlying instrument is falling in value, it wipes out all the yield, and you'd almost be better off in a stable currency.
There you go.
Not paying you yield, but not cratering.
Yes, yes. The safe havens. You want the safe havens. The United States dollar is going to be the only game in town.
Okay.
You know, the funny thing is, I went back and I looked at Martin Armstrong yesterday, last night, sometime. He thinks that we're going to negative interest rates. I don't know. But he also sees that same crisis that I saw, that I pointed out in the fourth quadrant. He thinks it's coming from 1917 to 2020. So I'm dead on track there. I got off track. What was the question? Let's go back.
Okay, well, you know, you're talking about that. You mentioned a few central banks to pay attention to that are close to moving to negative rates, and you mentioned Israel, the Czechs, and Bulgaria.
Yes, they're next. They're next to fall. What is negative interest? How about, let's take the next step. What does negative interest rates mean? The first phase is negative, obviously. The second phase is, what's the purpose of going negative? You want to stop the rate of growth of interest. The only way that you can stop the rate of growth of interest, or at least slow it down, is to go negative. I mean, essentially, what's the difference between negative and positive interest? Positive interest allows you to go to infinity. Negative interest, there's a bottom. Okay? 0 is your bottom. Minus 100. Negative 100, that's your bottom. So the third, there's, in my opinion, there's a third phase here. And it was revealed the other day by, it was either Draghi mentioned it, or it was, you see, Jean-Claude Trichet is coming back. One of those two mentioned it. They said, I think we're going to have to look at the exchange rate. That's phase 3. That's phase 3. Look at the exchange rate. How are you going to look at the exchange rate in this negative interest rate combination? First, what you're going to do is you're going to change the entire structure of how we are looking at our currency prices since euro introduction. Traditionally, we followed the 8:30 in the morning fix. That's, as of July 1st, that's gone. We're going, as of July 1st, to a 10 o'clock fix of the euro and all your currencies. Well, what happens at 10 o'clock? Let's ask this question. What's so special about 10 o'clock? 10:30 is the gold fix. And right in that area, I believe 11 o'clock is the silver fix. We seem to be moving toward this gold-silver fix. What are you doing by doing this? Again, you are trying to control the exchange rate and hold it in smaller ranges. Not only has the euro, the euro began with 15 categories of interest rates. Then they cut it down to 7. Now, beginning July 1st, they're cutting it down to 5. 5 categories, that's it. What are they doing? They're holding the interest rates into smaller ranges. They're changing the methodologies of their calculations. The methodologies within those 5 ranges will be held to transaction volume. So volume is going to run interest rates. Volume is going to run the exchange rates. All the central banks are doing this. They're doing this since the beginning of 2014, and everything, it's all coming to light here, okay? And then here's the other thing. Here's the most interesting aspect of this whole phenomenon. If You look at the methodology of all these central banks on how they calculate and they factor their interest rates and how they release their interest rates, and then look at the methodologies in how they calculate and release their exchange rates. Dale, it is the two are night and day. The two calculations are miles and miles apart. I said to myself, how could you guys do this? Was this, unless this was the method? But see, now that they're all shifting to smaller categories and they're going to hold these interest rates into smaller ranges, now what they're doing is they're calculating interest rates and exchange rates exactly the same. And they're going to hold it all inside those small channels. And again, knowingly, willingly, purposely. If you remember last year, one of these things that we did, I mentioned that if you go back to the Central Bank of England 2010 quarterly bulletin in the summer, you will see the statements where they say we are going to hold the exchange rates and stop volatility knowingly, willingly, and purposely, blah, blah, blah. That has been the deal all along. The BOA figured it out long ago. That's why you don't see much movement in the British pound. Euro is the way to go. Euro is the only way to go, and the only reason why it's the only way to go is because it is a complete opposite to the United States dollar. They're allowing the euro to move. They're allowing it still to be the total complete opposite to the United States dollar, whereas the British pound is very different. It's had a love affair to save themselves from World War I to the United States by hooking to the United States gold price when it was priced at $20.67. Okay, the world works like this, and then I'll get back to some of this methodology. This is fascinating. I'm sure you can see the euro on top or bottom. It doesn't matter. There are two currencies in this world: the euro and the United States dollar, the Dixie, the DXY. That's it. That's it. Everything else is in between. What's in between? All your currencies, commodities, everything is all in between. That's why the euro is allowed to move. That's why the United States dollar moves and hangs out with the euro. But that's why those currencies stuck in between don't move.
Well, the yen has been moving lately, Brian. I mean, there's been increased volatility in the U.S. dollar yen that I haven't seen for some time.
Yes, you're right. And when I say don't move, you know what I mean. Let me quantify don't move. Your better volatility is seen in the euro USD and in the United States dollar. Your best volatility. Okay, let me say that so I don't, yes, the yen has had good volatility as well. And this is why I've been saying I like the euro so much better to trade than the British pound, because the euro has much more volatility than the British pound. So,
okay, let me ask you this: the changing of the fixed time closer to the gold fix and silver fix, is it kind of a dress rehearsal to begin to tie the euro to the precious metal market? Would the euro possibly end up being precious metal backed? Because most people thought in a new currency regime it would be something like the yuan gold backed or an SDR. So is the euro vying for some type of precious metal backed currency?
I think the way to determine that is right now I'm saying yes, but I cannot say yes absolutely absolutely based on fact, but I can say this: we are moving to the gold silver standard. Okay, do we get there? Does it actually happen? I don't know. I mean, how do you get to a gold? Let's think about a gold standard. What exactly is a gold? Where do they derive the prices from a gold standard? 2067 United States and Roosevelt's 35. Where did they get this? I mean, what did they pull this stuff out of a hat? No. What they did was they took all the various nations' interest rates and somehow they, I don't know if they calculated the nation's interest rates. How did they get a gold price out of it? I don't, and you know, the gold fix, I don't know. Did they come up with some kind of a simple average, a median? You know, did they factor some kind of a calculus equation? I don't know, but that's where a gold standard comes in, and it comes in based on an interest rate. So are we moving to the gold standard? It's possible, yes. It's very possible. Let's go back and think about negative interest rates for a second, and then go back to the gold standard. What could they possibly be doing with the negative interest rate is, if they're going to follow the complete methodologies of Silvio Gozell, who invented these negative interest rates, then that means that they have to change the methodology in which they calculate negative interest rates. In other words, the way we work right now is interest rates are determined based on the money supply. We spoke about this the other day. You know, money's when they buy the bonds, interest rates go to nothing, right? This we know, and that's been the way it has. That's the way it's been. What changes, if they follow these methodologies closely, is the interest rate will no longer be associated. It will not move up and down with the money supply. It will move up and down with a price. A price of a nation. What's the price of a nation?
Oh, so you're talking about revaluing currencies based upon maybe a formula of GDP minus debt?
Yes. Yes.
I've heard that's going to be the revaluing. How they're going. That's going to be the.
I think it's going to be. You have to factor inflation in there. And if you go to Silvio Gozell, and this makes a lot of sense, okay? The only way that you can keep a price channel and keep your system inside this price channel is the prices must remain inside money velocities. That's what will be driving the system. Higher velocities, prices up, interest rates up. Lower velocities, interest rates down, prices down.
Okay. Well, the U.S. Despite all its printing, has had very low money velocity, hasn't it?
Right now, it is at 5.9, I think. I wrote it the other day. I can't exactly remember. It is at the lowest right now than it has been in, I don't know, a couple of years. It's in a range. It's in a range from 6 to 10. I believe that's 6.0, 10.0, the way that's factored. The euro is also in a range. You look at what you want to look at to determine what's real. You have to look at M1s. You got to look at your M1s, your M1 money supplies. They are in the range as well. They're in a very small range. They're holding these systems tight. Are they holding these systems tight because of they're connecting negative interest rates to actual prices? And what does prices mean? Well, we look at prices as inflation. Silvio Gozell looked at prices as hook those prices to commodities. Those are your drivers. Commodities, products, whatever, it doesn't have to be apples. I mean, a tractor is just as important as an apple in society, you know?
Yes.
I hope I'm making sense here, and I hope I put this thing together. You know, there's a lot to this. There really is a lot to this. You know, and the question is, are the central banks going to do this? Are they going to succeed? Are they going to follow? Are they going to follow Silvio Guzzel to the T? I'm at a loss for words. Yes, you know, I got an argument for yes, I got an argument for no, but since we're only adopting these negative interest rates recently, you know, so I need a little bit more time to know exactly, you know, are you leading us down to the gold standard? Do these prices that I think you may follow, does that lead us directly to the gold price and the gold standard, and then revalue all our currencies to gold? Is there going to be some kind of a volatility in there that's going to allow us, you know, to become traders? Yeah, I have more questions than I have answers so far. It's a fascinating system. I want to say on one hand it's brilliant, it will work, but then you're also dealing with the central bankers. So I don't know.
With this transition going on, does it make it hard for you to have more difficult for you to have actionable ideas in the market?
Yes, as a matter of fact, it does, because the ECB, they're eliminating the 2-week interest rate, they're eliminating the 2-month interest rate, and they're eliminating the 9-month interest rate.
So they're taking away from analysts like you barometers that you use to gauge where price could go to.
Exactly. If you look at, I mentioned the other day, if you look at all those trades that are on my blog site, I mentioned 300. I don't know. Well, I followed them up and down. They were all based on my interest rate models. Okay. And they're perfect. They're perfect. But they're taking away categories. They're shrinking the categories down to nothing, and they're holding the ranges down to nothing. So what I see so far, and you know, again, you can read this. I wrote all of this stuff. What I see is, let me give you an idea. Today's euro. Okay, today's euro. I figured and it factored everything. Today's euro's range is 60 pip range. If you cut the interest rates down, you're down to an 8 pip range. What I think
they want to compress volatility.
Thank you. If my figuring and factoring is correct, they're going to compress your prices by 1/3.
Wow! So they're killing our game.
Thank you.
The central banks are trying to kill. They're trying to kill the trader, take the trader out of it.
That's exactly what I'm saying. And if you go back, and you look at, I went back and looked. What I have is Australia's prices, daily prices, going back to 1919. I went back and looked at the various periods, the 20s, 30s. I looked at all the various decades, the gold standards, Bretton Woods, everything. I'm going to tell you, Dale, if they succeed in this, they're going to kill us. If you look at
Britain, well, we got a comment in the room. If the gold standard comes back, it will finish the Forex market.
It could very well be. It could very well be. The gold standards did. Previously, gold standards killed us. Bretton Woods, what was so special about Bretton Woods is that they instituted a it wasn't exactly hooked to gold, Bretton Woods. It was connected to a fluctuation band, 1%. They did 1% above, 1% below, and that was it. And if you went above or below, these central banks would come in with their money and bring the price back to some kind of equilibrium center, an acceptable level. ask yourself this question. And this was, and I encourage everybody to go and read the Natural Economic Order by Silvio Gozell. You can get it online. Put your thinking caps on with this guy, okay? It is fascinating. You got to do a lot of reading. What is the difference in, if the euro today is 108, it trades at 108, but tomorrow the euro trades at 115, 1.15, let's say. What's the difference? Where should the euro be? What is the value of a euro and our currency prices? Where are the central banks happy with their currency prices? They don't.
Well, I mean, the euro's been in the 10-cent range for 8 months now.
Yes, yes. Are they happy with these ranges? When you talk about the question of value, what is value? Value is, I don't know, intrinsic value, constant value, phantom value. There's a whole kinds of things of value, but value is one thing. Price is something else. What I think they're trying to do with the exchange rate is not only connect it to those more closer to these interest rates, but they're trying to somehow connect your currency prices to the actual prices of a nation, inflation. Or if, Silvio Gozell recommends that they connect their prices directly to commodities. I gave a number of examples. If anybody wants to read that, that article's floating out there somewhere, but it's on my blog. It's really, really fascinating what they're trying to do.
Well, don't you think, Brian? Right now, the dollar is viewed as the soundest currency. Armstrong's, a lot of super bears are still looking for a sharply higher dollar, and that for central banks to make a change until they knock the king off the throne and there's some type of dollar crisis, that it would take something like that before they came up with something different?
Yes, remember something. We're in the fourth quadrant. Oh, don't ever forget, man. Don't ever forget fourth quadrant. And don't ever forget that if you go back and you look at what happened in fourth quadrants, here's the 1920. Look at this. What happened here? World War I and then creation of the Fed. What happened in the 1960s? Gold wars. If fourth quadrant are, I like to quote Joseph Schumpeter when I mention fourth quadrants. Here is the quadrant of creative destruction. Ask yourself this question. I outlined 200 years of markets. All crashes occur in the second quadrant. But what does the world do in the second quadrant after the market crashes? Nothing. Zero. Why don't they fix the changes in the second quadrant? Nope. They wait until time goes on, until the fourth quadrant hits, and then here's where they get creative. There has been so many creative strategies in the fourth quadrant in the last 200 years. Every single one of them failed. They failed. They don't correct when the markets crash in the second quadrant and fix the changes so they can move on. No. They leave it alone. They move on, and life is a grand old place until the fourth quadrant hits, and then they realize, hey, we got problems. We better fix this or we're in trouble. So they implement some kind of a creative strategy. And that's basically what they're all doing now with negative interest rates. It's a creative strategy. What I would have loved...
Forex Pipper has asked, do you think that they're trying to bring all currencies to parity, all of them, and line them all up in there?
I don't know if it's possible. It is very possible to bring them all together, all as one. It is very I mean, we're close anyway. Think about it. Look at all your currencies. We're not far away. It's very possible. What I want to do is, and what I'm going to do is, I'm going to look into all of these. I'm going to look much more deeply into this thing. It's only recently that I read these papers and other papers and the natural economic order, and as well, I didn't realize until the other day that this thing's been going on with the ECB until early 2014. So I'm slowly putting all of this together. If they connect their economies to some kind of a price, maybe they all connect together based on purchasing power parities. This is what Gazelle recommends. Why? Because it stabilizes all prices throughout the world, and it brings everything together in that stabilization. So can they all go to the parities? It's very, very possible. It's very possible. You look at your purchasing power parities. They are possibly trying to bring it all together. Depends. How are they going to value the interest rates? That's the whole question. Are you going to value these interest rates based on the money supply, as has been done since 1971? Or are you going to value the interest rates based on a price? That's the way to know that is, again, to go to your central banks, follow those M1 money supplies. That will give you the answer to exactly what these guys are doing. And again, I have to mention, this is early for me,
Right, right. Yeah, it sounds like you're going to have to come up with a new model because of what they're doing.
That is the whole part that bothers me to no end. Here's the thing. I mentioned Martin Armstrong. I love Martin Armstrong, okay? He's a great and brilliant guy. And I already had an interest rate model put together, but I didn't totally understand it. I didn't totally understand it in terms of how do I put it into use. When Martin Armstrong, when he let go of that one sentence, when he said the exchange rate is inflated by the interest rate, I said, oh my gosh. So I went back, I looked at that model, I put it together. I mean, and it took me months upon months upon months to perfect it. You look at those 300 trades on my blog, that is the model, okay? That's the model. And it's the model for, I don't care what currency it is. I can do it for any currency. I perfected it to the point that all I got to do is enter a number, bang, it's done. And I know exactly what to do immediately. It allows me to make a trade decision in a second. Now, what they're doing to me is, now I got to revamp. I don't know what the system is going to perfectly look like. I've been playing with various numbers. I know that they're going to.
In an environment like this, do you stop trading and stop putting out trade recommendations?
No, we keep this up. We got till July. Right now we're good till July, Okay. And then we'll see in May and June exactly, if there's what's going on. We're going to see how they're going to price these things. That's the most. That's mostly important. How are you going to price your currencies? What's on your mind? And believe me, I am on the game of these guys. I like to say that Mario Draghi, he called me yesterday. He's asking for the rent money because I live in his head, I mean, I'm making a joke. I know it's not funny, but what I'm trying to say is I am inside these central banks. I know what they're doing. So
then let me ask you this for a wrap-up, and people are requesting your blog site, how they get to your blog, and Brian's Twitter handle is at author B Twomey. And so tell me what you see. I'm going to ask you for a Nostra Twomey. Euro 97 or Euro 120?
No. Lower first. Lower.
Okay.
Fed funds rates between 0.12 and 1.31. I know that's a big range, but that's where we're at right now. The 2-year yield between 0.53 and 1.44. Watch that close. Watch that 2-year yield. It's got a range. It has ability to fly up and down. It is the 10-year yield that does not. The 10-year yield, I'll show it to you guys. I'll show this. I don't know if you could see it, but
okay. We also got a question. Why July? Why July?
That's what the date the ECB and the bankers associations, that's where they came up with it. I don't know I don't know. It's their date. You want to watch very closely Australia and New Zealand in this whole scenario. They're the ones that are going to lose out, and their currencies. I don't know. You know, I haven't had time to delve into those two, but I can tell you right now that those two currencies have problems. Here, look at what I wrote here. Here, Australia, New Zealand. I wrote whacked. Okay, they're having problems right now. Let me go back. The 2-year yield I mentioned, 0.53 to 1.44. Here's the thing, the 10-year yield. Your resistance points above, 2.02, 2.21, 2.23, 2.27, 2.51, 3.03. What are you saying? That 10-year yield right now is at what? 1.7, 1.8 in that area, right? What you're saying, what would let Yellen raise again, or let something happen to rise this 2-year yield? Guess what we're going to have on our hands very soon? A flat yield curve. Flat, dead flat. That's a problem. Watch the spreads. Watch your 10 and 2 spreads, okay? That's what's moving some of these currencies. Your 10 and 2 spreads. The S&Ps above 1999.33, 2041.62. Oh, watch this, 1889.95. Watch 199.33. I mentioned that already. Euro versus the Dixie. What's happening here? They're flattening. You see, here's your euro right here. If you can see this, it's at -50 versus the DXY at a positive 153. What does that mean? I don't know if you could see. Your regression line looks like this, where the dollar is, I don't know what these pictures are on the screen. The dollar is high, the euro is low, and what's happening is that the euro is coming higher, the dollar is coming down, okay? The curve has, what I'm trying to say is the dollar curve has steepened against the euro USD. Inflation. Oh, look at my thing. I ran inflation in all the different periods. 1971 to 1921 to 71. 71 to present day. Guess what we got? 0. There hasn't been inflation in the United States in 100 years. What else do I got? I have interest rate forecasts. I put those on investing.com. I have EONIA, I have Sonia, and I have Fed funds. Guess what? No one's reading them, okay? No one. What does that say? Tons. 3 people read EONIA. 7 people read Sonia. Less read Fed funds. What does that say? Ooh, boy, does that speak volumes out here. Unbelievable. If you got, if you understand what I just said, go to the pre-2000 Bank of International Settlements triennial surveys and look at look at how they traded in the 90s. They traded everything by interest rates in the 1990s. When they introduced the euro, everything changed. Why? I don't know. I don't know. And now we're into this intermarket analysis and all these other things, that you don't have to do that. The currency market is a self-contained market. It tells you everything. All these pairs transmit messages, big giant messages. Look at the relationship between CAD, ZAR, and the euro, okay? To give you an idea of exactly what's happening, where we stand in our currency markets. Euro yen has to stay below. Euro yen has to stay below 132.24, 131.81. What else? CAD ZAR, one of the most important currency pairs out there to give you an idea of risk off, risk on. Gives you an idea of where the euro sits. Gives you an idea where the dollar sits in this dollar-euro relationship. Watch your silver currency ratios. Right now it is extraordinarily high. It is at 78.42 current. Your top is at 80.07. The last time 93, to give you an idea of what this top means, last time 93 was seen was March 1991. Before that, January 1941, it hit 97.31. Your silver currency ratios are extraordinarily important. They are great indicators to trade your currencies and trade all of your markets if you get into it.
Wow, boy, did you cover a lot of ground.
Yeah, I knew when you said I didn't have much time. I got all this stuff prepared, you know. I realized, Dale, I know that, nothing is ever worked out in advance when guys come on these shows, okay? And I don't care who these people are you got, from the big top guys to the nobody guys and everyone in between, you know. So what I do, and I don't come on, I'm not out very often, but so I prepare for everything and anything, you know. There's no such thing as I don't know. That will never happen with me, because I do know, because I'm ahead.
So what do I do with, Brian, what do I do with my, let's just say an average guy has a $10,000 account right now. How would you advise them to be positioned? And let's wrap it up with this into the July. Maybe you could look out to July and what you think is going to happen into this change, how people could capitalize on what you see coming.
Short euro. Euro stays in more contained ranges. I still love the short euros, and I think it's still going to go down. If euro breaks 16, then it's a problem. I don't see that happening. I like the short euros. Watch gold, extraordinarily close. Gold is now at 1183. The next above you want to watch very, very close is 1207. Below you got 1149, 1134, 1117. Watch gold close. That's going to determine and tell you what's going to be for the future. I still like the long dollars. I like the long S&Ps. Okay, long S&Ps, long United States dollars. Short euros, short British pounds, Australia, range, until the world figures it out. Australia's going to be range. Probably the same thing with New Zealand. What else?
Great interview, buddy.
Thank you.
You always come through. You never disappoint. And I'm getting. Normally, I don't get as many comments, but people are saying I need to rewatch the interview. Too much insightful info to get it all at once. Numbers said it was an electric interview. So, like a electric ladyland, you're like the Jimi Hendrix of FX trading. All along the watchtower, buddy. Thanks for being a watchman.
I see all the guys. I see it all. Hey, guys, in the law, thank you, everybody. Thank you, Brother Dale, always for having me. I hope everybody learned. I hope everybody profits. I hope everybody looks into all the information we talked about today. Any questions, anytime, just write me. Go to the site, btwomey.com. Write me anytime. I don't care.
Okay, so that's your blog, btwomey.com.
Yeah, that's the book site, and then you go to twbryan.wordpress.com, and then the Twitter thing at author btwomey.
Okay, so I've been calling you Twomey for 2.5 years, and it's Twomey.
Yeah, it don't matter.
So all right, what do I know? I'm from Chicago. So Brian, thanks again, buddy. I hope tips rain down on you, and appreciate it. Let's get back. Late spring, early summer, see how things are proceeding, evolving into this July time frame, okay?
I'm here anytime. And muchas gracias, Mauricio, Adinda, and all the people involved, and thank you, Dale.